All right, guys, welcome to this video. I did promise I was going to do a video on internal range liquidity and external range liquidity. Okay, this is a continuation of our liquidity concept. So I've always this is the model that we trade. We want to see price at any time create this ABC pattern where the C leg comes to take out the B leg, and then we move on. So this is my B leg. This is my B leg. Then we have the A leg. That's my A leg. Then this is my C leg coming back to take out So this is the pattern we want to always see. Price is a complete range. Okay, if you watch my previous videos, you will find that this is a complete range. Price comes at the first move, price creates an inducement, price move higher, and then price comes back. So in internal and external range liquidity, we're saying that this is your internal range liquidity. That's where you want to look out for. So sometimes price might have maybe a fair value gap below this, or you can just target this internal range liquidity, but price always come to capture this internal range liquidity. So this B leg is my internal range liquidity. Internal range liquidity. And then the C leg is my external range liquidity. External range liquidity. You use the external range liquidity as your take profit. That's your target. So if I have a weekly chart, for instance, the first thing I want to look at, I want to see this formation on my daily and 4 hours for entry. So if I have a weekly zone, I want to look at this formation majorly on my 4 hours. Yeah, I'll check out daily, but majorly I want to look at 4 hours. So ordinarily, if I'm having price give me this, and then I know this is my zone I want to look at for entry. Okay, what I want to see is this formation at this zone. So price will come, take out internal range liquidity, and then we get entry around this zone to capture external range liquidity. So look at what happened on VIX 25. I'll just use this for example of this course. Now look at the weekly idea of VIX 25. Okay, we had all of this zone here, all of this zone here. So what was I looking at? I want price to come and capture this liquidity. So price came, A leg, created D leg, and price gave us a C leg. C came to capture this liquidity. And so long this high has not been captured, I knew that this next liquidity was going to be captured. So this becomes A leg. This is now B leg that was created here. And price should take this up before price will return back here. So looking at all of this, this is what I was anticipating that would happen for price. Here, I needed price to buy. I was looking at price buying at this last, bearish candle. Just normal structure, all right? There's no big deal there, normal structure. If price should come here, I want to see that same formation here. Price will capture liquidity, take out internal range liquidity before buy. So let's see 4 hours at this zone and see what happened on 4 hours at this zone. Okay. Then I'll show you the trade we took last week. So price gave us this leg here, created this high, and you can see this side was a valid zone because price took out this liquidity. So this becomes a valid zone. So I'll ignore all of that. I'm looking at all of this doji here. That's all I'm looking at. But the same pattern, price gave us this break of structure. Okay, it was very obvious. Price took out all of the structural zones. So we go with our model. All right, A leg spotted. So this becomes B leg. B leg. And this becomes C leg. That's my C leg. So necessarily, I want price to come and capture this out. If you put it on a line chart, you see that that's the formation. A leg, B leg, and then C comes to take out all of this. Okay. So now that we had this formation, price is returning back to this zone. You want to look out for the same pattern here. So let's talk about internal range liquidity. Price created all of this sell. Look at this bullish candle, took out the low of this candle. That's a liquidity that was captured. And price gave a bullish engulfing closing above. Now, price didn't give us the exact pattern I want us to see here, but let's go to, let's check the last sales that we caught over the week. So all of this external range liquidity, internal range liquidity was captured here. This external range liquidity that you want to take as your take profit. So if you had your entry here, even if it was here, because we also have entry models, okay, that I teach in my private community. We have entry models on lower time frames that we take here. But I'm not going to talk about that right now. We want to capture to this high. That will give you more than a 1 to 3. So this high 2.8. And then to all of this high, more than 1, 3. Okay? Just ignore this. It didn't give me the pattern I want to teach us. What will happen here? There was this buy, this push up, and this push up. So necessarily, price should come and take out this because this is my B leg. A leg, B leg, C leg should take this out. And price actually took it out. Price actually took it out. So now that price captured it at this zone, what am I looking for? I'm looking for that same pattern. Internal range liquidity sweep. Now, I've told us that every candle is making a statement. How the candle closes is a statement. Price has captured this liquidity. You know necessarily that by structure, price will go bullish from there because we have A leg, B leg was taken out by this C leg. Okay? So now how will you have gotten this? Watch how that candle closed. This bearish candle captured this low and closed above it. I've said this in my community many times. Once you see a candle closes above it, what you want to look out for is your internal range liquidity to be captured. Internal range liquidity, and then that internal range liquidity is your entry. That's your entry. The internal range liquidity is your entry. And then you capture the high, which is your external range liquidity. This is the entry any day, anytime. So watch this candle, took out all of this and closed inside. This is the pattern you're looking for. You wait for the next 4 hours candle. That's the next 4 hour candle. Watch what happened to it. That next 4 hours candle is your internal range liquidity. Price will have to create that. That's your internal range liquidity. You can see how that price came and took out that next 4 hour candle week as your internal range liquidity. And then this will be your entry, stop loss at this low. And then where is your external range liquidity? Is your external range liquidity, the high. So price took that next 4 hours candle out, and the high is your external range liquidity. Beautiful. That was the trade there.